Joining me now for a broader look at this afternoon's market performance is Shaun Dendere from Trive Investments. Shaun, thanks so much for your time this afternoon. So Trump saying he'll be relaxing some of those tariff regulations, holding back on auto levies. This somewhat fueling market sentiment, but we are seeing some calm coming through. And I guess also just pointing to how traders and investors shouldn't get too excited because things could just change at a snap of a finger, right?
100%. Firstly, thank you for having me. I think the tariff story has been, the news story this year with President Trump trying to impose economic dominance on the rest of the world. And if we're looking at the markets yesterday, if we look at the U.S. markets, they basically wiped out all their gains since Trump came into power, since November. So I also think that Trump is definitely aware of what he's doing to the markets. Mm-hmm. Therefore, that's why we see a kind of easing. The way I tend to look at it, it's almost as if he tests. So you put out a policy, see how the markets react, see how the other countries respond, and then the next day decide, okay, that was a bit overboard, and then he kind of retreats. And I think that's the cycle we're possibly going to be seeing going forward in his regime.
And this, of course, may also increase global inflation. And that brings me to my next question around monetary policy. The ECB is expected to cut rates this afternoon, but many analysts say this could be the last meeting where all policymakers agree to cut rates, as there's, uncertainty around the global inflation picture with those trade jitters at bay. And we also see, that economy, the European economy, under pressure.
100%. I think the ECB is under pressure, like you said, in that the way their rates are currently is restrictive for that economy. So it's definitely going to be a delicate balance with the potential trade war that we're going to go into. But with one more cut, that might just make that economy, let's put it under less pressure going forward. And then we have to just keep an eye on what happens with the potential trade war that we're going with respect to inflation and how those tariffs will impact that.
Let's move over to some company news. First Rand delivering 10% growth in earnings. Interestingly, it managed to deliver a 4% rise in net interest income despite, the lower interest rates environment. What have you made of those numbers?
I believe it's a sign of the times. I mean, if we look at the past year, the economy was categorized by high inflation, high interest rates, and you note that, interest rates have been slowly being tapered out by, the Reserve Bank, and consumers technically have, more disposable income. Therefore, for the banks and lenders such as First Rand, that is positive for them. It's showing a little bit more economic activity from, the consumer at large. So regardless of, the interest rates being lower, where, financial institutions were actually making money from, their client base has grown by 9%. Therefore, you can see that, clients or the consumer is willing to spend a little bit more. There's a little bit of pressure on that side.
And what have you made of their UK operations, particularly that auto lending unit, loan unit that's been under pressure because of the probe in the UK? I was reading some of the commentary from the results, and the group did say that they are cautiously optimistic about that environment.
100%. So it's always difficult, for a company operating outside of where they're domiciled, so South Africa. So as much as there is a sign of recovery, and I think they probably have news regarding their probe that things are going to be a bit positive. So that's why they're going to definitely be cautiously optimistic without saying it outright.
Yeah.
So I think it's just a position where they're anchoring themselves.
Now, upbeat new business volumes, one of the reasons giving Sanlam a boost. The groups reported a 37% jump in HEPS. But last time I looked, that share price was under pressure. I think it was down close to 0.7%. Why the disconnect? The numbers look good, right?
The numbers definitely look good, and it's also a reflection of what we mentioned with First Rand about the sign of the times in terms of Sanlam, their collections for insurance, life insurance, investments are doing quite well. I honestly think that, in my opinion, is that why the share price is, let's call it flat, is that we're not too sure how the merger or the buy of Ashapul will look like going forward.
Okay.
So I think we'd obviously have to see that go through and see how the business operates after the fact.
Let's move over to Grindrod. The border closures rather, on the back of the civil unrest in Mozambique, really eating into Grindrod's profit. The group posted earnings decline of 69%. Just take me through your analysis of those numbers.
I think, like you mentioned earlier in your news segment, they have been quite resilient, especially on, the road. So in terms of their core business, they have managed somehow to circumvent, the natural forces, so the cyclones that are experiencing, the war or the civil unrest in Mozambique. So I look at it from a core business perspective, they're not doing too badly.
Okay.
What is really affecting those numbers is their non-core business, where they had, I think, a disposal of assets whereby that disposal led to about a 500 million rand loss, which has then obviously affected the bottom line. But if we're going forward, looking at private rail and how they're going to explore new opportunities in Africa and in South Africa, I do believe that, that it definitely is going to turn around, especially if we look at how they actually performed from their core business perspective, because I think they took in about 1 billion rand in revenue there. So there is green shoots. It's just a stock that, or a company that has to take its time and bide its time in this environment.
All right, let's just hit pause on the conversation. Before we get to your stock pick, let's reflect on some counters that have found favor with your industry peers.
Naspers again.
Okay.
Just reiterating what we have already said. Beyond the Tencent play and all the rest, bullishness on the Chinese economy and Chinese technology in general. We are of the view that the current discount to underlying NAV isn't exactly justified, and we expect management they seem to have become a little bit obsessed about plugging in that hole. So we believe at the very least they'll continue to use share buybacks because they model this as well now. They follow this more closely than they used to. Almost like the Yanni Mouton used to do with PSG. I believe when the discount gets wide, they buy more aggressively. So from that perspective, we think those buybacks will remain accretive, and in time the market may warm up to the current CEO and his direction. Hopefully, this share reaction makes them realize they need to be more cautious. But beyond that, we think it's just an incredibly cheap entry point relative to its underlying assets, never mind the expectation for those assets going forward.
Can't go luxury. And if you're going to go luxury, go right to the top, which is Hermes, which not even you can afford to buy those bags. And you know what? Even if they're tariffs, I think the people who buy those bags, the Birkin bags, and go to Hermes, it doesn't affect him whether the prices are up. It's just so snobbish. So it's a wonderful, wonderful business. And, so I'm sticking my neck out and saying, yeah, we're going to see a recovery in luxury against the backdrop that we've been speaking about.
So Hermes and Naspers, just your views on those counters.
I think interesting comment there by David Shapiro and Hermes. I think there are definitely good stocks to potentially watch and potentially buy. We're looking at Naspers, they're a bit undervalued, and there is obviously Tencent at play there. The same thing, it's going to lead into actually what's happening in China. So we see that the Chinese authorities are starting to aggressively try to reboost that economy, especially with this trade war coming in. So any of these stocks that are linked to the Chinese and the Chinese consumer, we might see a positive upside, because obviously China being the second largest economy and them trying to beat Donald Trump and his tariffs, there is a positive outlook. So on their side, on those stocks, I do not disagree with both the individuals there.
All right, let's get into your stock pick. What are you hanging your hat on today?
So I'm definitely not picking a stock per se. I'll rather go with an ETF, and by an ETF, I'm referring to any gold ETF, because we are in that environment where we don't know what these trade wars are going to do. We do not know what the United States president might even say tonight, and that can potentially affect the stock market. And the gold price has been doing quite well over time, and we're seeing weaker dollar. Therefore, I think a gold ETF in this environment of uncertainty would be my best bet.
All right, Shaun, thanks so much for joining us and sharing your insights on the day's markets moves. That was Shaun Dendere from Trive Investments.